institutional equity, the Ambit Capital, and Arvind Sanger, managing partner of Geosphere Capital, also joins us in the conversation. Good morning, Arvind and Saurabh. Saurabh, you heard what Anuj was saying. Is there a major knee-jerk reaction yet waiting to play out today itself?
Look, I think short-term market movements will always be a little unpredictable because I think as Anuj is saying, I think Lata, you're saying yourself, there's so many other factors playing out in parallel. China's disastrous trade data, the high probability of a Fed hike. So it's difficult to make a call on short-term factors. What I think I can see with a reasonable degree of confidence, I spent most of the last 2 weeks traveling to meet clients in Europe and the Far East, is that there is a generation of investors abroad and in India who entered the Indian market on the back of Narendra Modi's election, either in the run-up to 2014, May 2014, or in the months after May 2014. And clearly, psychologically, they will be a little disappointed after yesterday's result, and there could be a modest reaction after that. But I think the bigger story for our country remains the sheer difficulty of corporate earnings to move. We've had 6 quarters now of no movement in corporate earnings, and I honestly don't see that changing over the next 2 to 3 quarters. So in a country where corporate earnings refuse to move, it's difficult to be too optimistic about the stock market, and that's why I've been circumspect for the last 6 months. That overall picture of an economy growing at 6-7%, but corporate earnings simply refusing to grow, I think unfortunately will remain our reality for a few quarters to come. That's the background mood music, which is negative, and on top of that you have these specific announcements around the Fed, around China, around Bihar elections, which will obviously dampen market enthusiasm. That's the best I can say at this juncture. There will be disappointed investors who will be looking to sell. How far the market falls today, hard for me to guess. I'm not that focused on the short-term movement. My focus is on, can we see anything in the next 3 to 4 months? It gives us some visibility on earnings revival in FY17. FY16 earnings revival, I think we've broadly given up on.
Okay. In fact, let's pose that question to Arvind Sanger as well. Arvind, hi, good morning. Clearly at the end of this election, you got a sense that brand Modi has been hit, not just with the average voter in Bihar, but also with corporate India, with the elitists, etc. Will the foreign investor confidence get hit as well after this elections?
Well, I mean, I think it's just another negative data point. But, I would take the other side. On late last week, you had the announcement about a restructuring package for the state electricity boards. On Friday, you had some announcement on some tax, excise tax increases on gasoline and diesel, and some other reforms on the fuel subsidy side. So, the government is trying to do some good things. But in some senses, it's become its own worst enemy in terms of some of the other things that are going on the social front that are taking attention away. And frankly, the government has not been able to get the businessmen or the businesses to have confidence. So I think that the government is taking incremental steps. Unfortunately, the big picture is working against them, whether, as Saurabh said, the earnings have been disappointing in the last several quarters. And that's continued to remain a big overhang. And in addition, now the big concern becomes, is the government going to lurch leftward as a result of this, embarrassingly large defeat in Bihar, whether that's going to cause them to go more populist, or are they going to double down? Because, I mean, I think, I'm reminded of that slogan from, I think it was Bill Clinton's election campaign, where one of his key campaign advisors had coined the slogan, "It's the economy, stupid." And if this government can remember that that's what they got elected on, and that's what they're going to get re-elected on 3.5 years from now, notwithstanding whatever happens in the state elections along the way, and if they continue to, or not continue to, actually increase their focus on fixing what needs to be done, and it doesn't have to be what can get through Parliament, but other things that need to revive investment spending and consumer confidence and infrastructure spending. If they can do some of those virtuous cycle, then we have potential for fiscal 2017 to surprise on the upside. Clearly, I think I don't think the December quarter is going to be anything to write home about. But I think foreign investors, therefore, are also going to be much more skeptical in a show-me mode, because we've all lived the dream. And the dream hasn't come, or we've all dreamt the dream, but the dream hasn't been followed by reality, which has delivered in terms of earnings performance by Indian corporates.
Okay, no, Arvind, I just want to know whether you would consider current levels even viable. What's the kind of lows that you would think are attractive enough to buy?
Well, I mean, I think, again, I'm not really buying the index, but I assume a 5 to 10% pullback in the index, if we got that, would create some very good opportunities in some of the companies that we like from a bottom-up standpoint, which are, not really dependent on whether Modi's popularity takes a hit or not, whether GST gets through the Rajya Sabha or not. Those are big picture issues that don't matter for many, many companies. So if you've got, 10, 15, 20% pullback in some of our mid-cap names, which I think would require a 5-7% pullback in the index, if it got to, 7,500, I think we'd find some really interesting opportunities bottom up on individual names that we'd be inclined to act on.
Okay. Saurabh, this year has been bottom-up stock picking year, even though the index has not done much. But is there a risk now that, the kind of buying that we have seen from domestic investors, even that ebbs and, we see damage in the market because of that, because FIIs clearly are not pumping in the kind of money that they did last year. And this year the market has been supported by DII flows.
Yeah, I think a couple of interesting points. If you see FII debt flows have actually been fairly healthy. In fact, FII debt flows, I think, are now more than FII equity flows. And in effect, what's happening is FII debt is, I think, increasingly going to be the cheapest form of debt for some of the larger corporates in our country, which is, I think, bizarrely a risk for the banks, because banks stand a real chance of being disintermediated by FII debt. But coming back to the whole stock picking piece, my reckoning is what's happening is you've got Modi's reset, which is a very different way of giving subsidies, direct benefit transfer, a real pushback to the crony capitalist model that we've seen evolving in India over the last 10 years, and a pushback on black money. You have Modi's reset. Now I think what I would call it's joined by Rajan's reset, which are these 23 new banks, payment banks, small finance banks, and the governor has made it clear that he'll have banks on tap. So you've got a big sector, BFSI, under pressure because we have got an RBI governor who's very clear that I want to increase competition in the sector, pull down ROEs. If you combine Modi's reset and Rajan's reset, it does put serious pressure, serious earnings pressure on the Nifty, right? And even if you have the economy growing at, say, 7, perhaps even 8%, I'm not so sure earnings growth comes back. So what you're therefore looking for is what stocks can I find which benefit from the double reset, the Modi-Rajan reset. So the three areas where we are asking clients to look for contra plays in real estate. Look for companies who use land, real estate, rentals as an input. So cinema chains, restaurant chains, retailers are one area we're looking at. Secondly, look for exporters. Look for companies who benefit from a country where cost of labor, land, cost of capital is lower. So look for manufactured goods exporters. And the final place, look for financialization plays, because what we are seeing is people are taking their savings away from land and real estate and coming into the stock market, coming into the banking system. So look for plays on the stockbroking, fund management construct. I think that's the way one will have to look at the market. I think it's partly theme specific, and then within that stock specific, the old notion of Nifty earnings growth or Sensex earnings growth, I think will not be very rewarding, because I think, as we can see over the last 6 quarters, it's simply refusing to grow. There simply isn't any corporate earnings growth at the index level. And I think as we go forward and as these resets become more entrenched, the Modi and Rajan resets, we will have to move to thematic plays, and within that, what are the 2 or 3 stocks we can find under.
So could 9100 be a peak for a longer time than we are imagining right now?
So my view has been on the index, on the Sensex, that 22,000 downside has been in play. I've kept that in play for the last 3 or 4 months, and my view is there's a serious chance that as the market realizes that corporate earnings growth in the current composition of the Nifty or the Sensex becomes difficult, there'll be a real sort of disillusionment with the current index, because they'll realize that even as the country is growing at a decent rate, this index really isn't giving me a crack at getting onto that earnings growth. Look at the last 6 quarters. We've had GDP growth between around 7% in real terms, nominal around 10%. We hardly had any earnings growth in these last 6 quarters. So I think as people realize that Modi and Rajan are changing the country quite fundamentally, there will be a disillusionment with the frontline index, and as you're saying, stock picking or thematic stock picking will become the way to play the Indian market.
But aren't you looking at some green shoots in terms of positive passenger vehicle sales that we got in the latest month, as well the IIP numbers, however lagged and volatile they may be, still indicate an upward trajectory in terms of growth. Arvind referred to that discom problem getting de-knotted.
Yeah.
A lot of hard work has been done in terms of environmental clearance, faster OKs for businesses. Won't they all fructify into something in 2017?
So I agree, Lata, they will. The point I was trying to make is economic growth hasn't been that bad as it is.
Yeah.
I mean, hopefully going forward will be incrementally better. But the challenge with our country doesn't seem to be economic growth per se. The challenge seems to be, does it translate into earnings for the index? And that's where I think the disconnect has emerged. The index, if you look at it, a combination of banks who are fighting fires on many fronts. You've got a combination of metals mining companies who are obviously squeezed by global factors. You've got a construction sector and a building materials sector which is squeezed. So the ability of the index to give you a proxy play on the economy, I think, is seriously under question now.
Okay. I wanted to talk to you a little bit about the pharma sector as well, because that's one sector that gave you great returns this year, but now that's coming under scrutiny with what happened with Dr. Reddy's and Sun Pharma now over the weekend. What's the sense you're getting? Should investors use this as a buying opportunity, or will this sector now move to the back burner?
I think, you're very right to say that, we amongst others have been overweight on this, and clearly you had a barrage of FDA announcements which has put the sector on the back foot. I don't think the sector is going to come back into the limelight that quickly. I think Ind AS, I think, clicks in from April 2016. I think Ind AS will have a meaningful effect on the sector. These are the new accounting standards. I think they'll have a meaningful effect on the sector. I think revenue recognition in the pharma sector will come under a bit of scrutiny. So leaving aside FDA, which is an unpredictable element for a sell-side analyst like me, I think the accounting piece will come under scrutiny, because I think the revenue recognition standards do appear to be different under the IFRS or Ind AS standards as opposed to the Indian GAAP standards. And it could well be that on the back of new accounting standards, you see another ratchet of pressure on the pharma sector.
Okay, Arvind, is that the sense you get as well, especially with both IT and pharma, that kind of defensive flavor that some of these stocks had may no longer be the case as we move forward?
Well, pharma is not an area that we have particular expertise in, so I'll pass on that one. But in terms of the IT sector, I would say that their own top-line growth has been somewhat less robust or predictable than what we've been used to the last several quarters. Now, there might be a lot of transitory factors going on, but I don't think it's a no-brainer that rupee is going to be weaker, so therefore let's go and buy the exporters. I think that's too simplistic a logic to use. I think, again, this becomes a stock picker's market, and I think similar to what Saurabh was saying, it becomes either individual stocks or subsectors, right? I mean, we like the auto parts companies, but you've had a couple of auto parts companies that have taken big beatings recently. And then, on Friday, you had one of them, Motherson Sumi, report some pretty good numbers, and the stock had a good rebound. So again, it becomes, rather than making a broad-based call on any individual, company or sector, or the overall market, or any subsector, sometimes within sectors, you have companies that are able to navigate some of the cross currents better than others. And I think it is really that kind of opportunity that presents itself. In some of the exporters, I think clearly the exporters should have at least one tailwind behind them. Remember, Friday after the Indian market closed, you had very strong employment numbers come out of the U.S., which suggests that December is becoming a much higher probability. I think the probability now of a December rate hike is over 70%. So that does create, some currency headwinds for the Indian rupee, and that's obviously a tailwind for some of the export sectors. But whether it's IT or it's pharma or it's auto parts or it's textiles, I think again one has to keep that favorable backdrop in mind, along with some of the unfavorable issues, whether it's FDA-related issues in the pharma space, or it is, slowdown from some of their customers and some of the auto parts companies or what have you, or the IT companies, and therefore try to find which ones are going to be able to take advantage of this and which ones are not going to be able to take advantage.
Okay, Saurabh thinks even 22,000 is possible. I mean, though admitting that index is clearly not an index of growth anymore. What's your sense, Arvind? How bad does it get?
As I've said, I think 5-7% pullback would not surprise me. One of the areas where I would take a slightly different viewpoint than Saurabh is not about where the index goes. But assuming that the reported top line and bottom line of the Indian companies is accurate and the GDP numbers are accurate, to me, that makes no sense. Having watched China for a long time, this reminds me of Chinese statistic. From the bottom up, you can't see it. From the top down, you're being told GDP growth is great. And I think really the challenge lies in the fact that if the Indian corporate's top line is not growing at 8, 9, 10%, which is what the nominal GDP growth would imply, and certainly the rural sector non-listing is growing even slower, then where is this mysterious person or part of the economy that is growing at double digits to get us to this 10% nominal growth? And I think the real answer lies in the fact that the GDP growth is really not doing well, and I think that's frankly why we're seeing disappointing numbers. So one of the disconnects that I think will probably resolve in market selling off is recognition that maybe this GDP growth number, which has been a feel-good number, is really not something that you can count on in any corporate top or bottom line. The reality is the top line should be showing GDP growth kind of numbers, and it's not. And I think that could cause profit taking, especially if the domestic, and I think this is something you discussed earlier, the foreign investors have been selling for a few months now. It's the domestic investors that have been actually the real bulwarks in this market for the last few months, buying at every foreign selling. So I think the foreign selling is probably going to continue. The real question is, are domestic investors so enamored of Modi and his vision that they're willing to overlook kind of the shock of the Bihar election? And my big concern in the short term is domestic investors might get a little nervous given everything else going on in the economy, and that would drive that sharper pullback. That's certainly possible.
Okay, just one final question then, Saurabh, before we let you go. The lows of this year have been at 75-40 odd level. How high is the possibility of us taking out those lows by the end of the year?
I think, if you look at this triple combination, we've been discussing Bihar. Arvind's put the Fed rate hike into the picture, I think rightly so. It will become a big point of discussion over the next 2 to 3 weeks. And I think China's disappointing trade data will bring once again, I think I would guess within 2-3 weeks, the specter of another Chinese devaluation will be hanging heavy over us. So 10% downside between now and year end certainly looks to be a reasonably high likelihood possibility. But I'll keep going back to this 22,000 point, because what I'm seeing around me, both on the institutional investor front and on the more limited retail investor interaction that I have, is there's still sort of optimism in investors' minds, which doesn't seem to be sort of based on data. It's more around the hope that this country is going the right way, things are all right, GDP growth is all right. I think Arvind's right to question the numbers, but there's still a lot of people out there who believe India is an island of stability, calm, etc. Once those notions get discredited, and once those investors give up hope, that's when I think this market really bottoms out. You still have a reasonably high degree of hope baked into Indian stock prices. 7,500 I think is reasonably likely, but that's not where the hope gets killed. I think for hope to get taken off the table, you need more like a 15% correction at the index level, and that's the level at which we will turn, what I call cheerleaders on India. We've refused to be cheerleaders for the last 6 months, but if we see a big pullback, a 15% pullback, I think that's the time Ambit will turn a cheerleader on the Indian stock market.
All right, Arvind, Saurabh, thank you very much for joining us and putting a whole lot of domestic and global cues into perspective. Well, not looking very good.